as you know, the world has had a very long, in fact, in the U.S., the longest prosperity without a problem in American history. And the politicians like that. They think it's fun. They think they'll get them elected. They don't particularly care about you and me. They care about getting elected. That's their reason for going to work every day. So they have learned to print money. It's not just the U.S. Many countries have been doing it. I mean, Japanese, oh my gosh, it's unbelievable how much they have been printing. But everybody's been doing it. And history shows, Andy, history shows me, that eventually leads to problems. Great. It's great while it's happening, but in the end, somebody has to pay the price. And you know what, Andy? You and I are going to pay the price, and a lot of other innocent people. Not today. Don't worry, not today.
Then when, if it's not today? You don't have to answer that.
Go ahead. Oh, I do want to say one thing in that regard. It's been the longest in American history without a big problem. So I don't know, but I know it's getting closer. I'm mainly looking for is, where is the safe haven? Is there a safe? Yes, I own gold. Yes, I own silver. But even if the world suddenly goes to some kind of gold or silver standard, it'll take a long time. It won't happen quickly. And in the meantime, there'll be chaos and confusion and disaster. So my worry is, where is it? What is it? Who is it? And I hope Andy knows. I hope Andy will figure it out, and Andy will tell all of us, because it is going to be a huge problem. And if there is major currency turmoil in the world, that is a disaster, the likes of which we have not seen often in world history. Right now, if and when we have a big bear market, for whatever reason, and it has to be horrendous. The debt everywhere is staggering. I mean, you look at Tokyo, it's unbelievable how much debt they're building up. Every day, the Bank of Japan goes to work and gets more debt. Astonishing. They're good Japanese bureaucrats. They do it this. I mean, as I look around, I don't see any place that's a safe haven. I own gold, I own silver, but if and when turmoil comes, it's going to be hard pressed to go down to the grocery store with my silver and say, I need a loaf of bread. It's going to be very difficult everywhere. So what I'm afraid of is the next bear market is going to be very bad, because the debt in the U.S. and elsewhere, the world has never seen anything like this. And it keeps getting worse every day. It's not as though there's somebody saying, oh, we got to do something. Every day they say, we got to borrow more money. We got to print more money. So if and when the crisis comes and we're all forced to deal with a problem, that's called a horrible bear market. When the world is forced, when the market forces us all to deal with problems, that's a horrible bear market. I leave it to everybody to figure out their own way to face this problem, but I don't see any way to avoid the problem coming. You and your listeners and everybody, we're going to have to deal with it, because it's not just the U.S. Everywhere the debt gets higher. And, in 2008, China bailed us all out. China didn't have much debt, but now China's got huge debts. I don't know who's going to bail us out this time. North Korea doesn't have debt, but everybody else does. And North Korea is not going to bail us out. So, as I look around, I don't see anybody who doesn't have huge debts now.
Jim Rogers, who sees storm clouds gathering on the global economic horizon. According to Rogers, we're in uncharted territory, as the world has enjoyed one of the longest stretches of prosperity in recent memory, especially in the United States. But this apparent stability has come at a high cost, fueled by soaring debt, rampant money printing, and a political landscape more focused on quick fixes than long-term stability. Rogers doesn't mince words when it comes to the dangers of excessive debt. Somebody has to pay the price, he says, and he's absolutely right. Politicians may enjoy the temporary boost that money printing provides, but this strategy simply kicks the can down the road. And while it may not be an immediate concern, the bill will inevitably come due. The staggering levels of debt we see today aren't sustainable, and history shows us that every time nations indulge in unchecked spending and borrowing, there's always a reckoning. Let's look at the situation in Japan. As Rogers mentions, The Bank of Japan has become one of the biggest debt holders globally, with record levels of government and corporate debt. Japan's debt-to-GDP ratio has reached over 260%, one of the highest in the world. The Japanese central bank, in an effort to keep the economy afloat, has been on a relentless campaign of bond buying and currency devaluation, essentially doubling down on debt and monetary expansion. This may seem distant, but it should serve as a stark warning for anyone who thinks this strategy can go on forever without consequence. But it's not just Japan or the United States. Most countries are participating in what can only be described as a debt race, where the aim seems to be to print as much money as possible and hope for the best. The result? We're left with a world drowning in debt, with very few safe havens left for wealth preservation. Rogers isn't alone in his concerns. Economists, historians, and financial experts have pointed to the undeniable fact that fiat currencies, which are backed by nothing more than government promises, are vulnerable to collapse. And this is where precious metals, gold and silver, come in. Gold and silver have long served as safe havens in times of economic turmoil. Unlike fiat currencies, they aren't subject to the whims of central banks or political agendas. They are finite resources with intrinsic value, and they have stood the test of time, holding value across centuries and civilizations. Rogers, who is a strong advocate of gold and silver, argues that these metals will be crucial when the next bear market hits. And with debt levels at record highs, he believes that the next market downturn won't be just another recession. It could be a full-blown economic crisis. The U.S. national debt has now surpassed $33 trillion, and it keeps growing by the second. The government borrows more money each day, creating a cycle that only amplifies the eventual fallout. When debt becomes too high, the value of the currency backing that debt inevitably weakens. And as Rogers says, currency turmoil could lead to disaster on a scale the world hasn't seen often. He's right to emphasize that currency devaluation leads to inflation, and inflation erodes purchasing power, affecting everyday people. Families trying to put food on the table, pay their bills, and save for the future. One way to safeguard against this is by investing in assets that aren't tied to fiat currency. Gold and silver are prime examples, as they tend to hold or even increase in value when inflation rises. The dollar, yen, euro, and other major currencies may fluctuate, but gold and silver remain universally valuable. This is why Rogers owns both metals, not only as a hedge against inflation, but as a safeguard against a possible currency crisis. Rogers draws a compelling historical comparison, highlighting that economic dominance is never guaranteed. In 1924, the British pound sterling was the world's reserve currency, and Britain was the most powerful nation on earth. But just 50 years later, Britain needed a bailout from the International Monetary Fund, IMF. The pound had declined drastically in value, and the country's debts had become unmanageable. If such a powerful empire could fall, why should we assume that the US dollar or any fiat currency is immune? The lesson here is clear. No currency, no matter how dominant, is invincible. Rogers suggests that the American economy, burdened by astronomical debt, could face a similar fate if corrective action isn't taken. And unlike Britain in the 1970s, there may be no global powerhouse ready to bail out the United States. China, which helped stabilize the global economy during the 2008 financial crisis, now has its own debt issues. If a new crisis hits, there's a real question as to who, if anyone, would step in.
This is 2024. In 1924, Britain was the richest, most powerful country in the world. Pound sterling that was all there was in 1924. As you well know, I'm sure, 50 years later, Britain was bankrupt. Literally had bailed out by the IMF. Now, that went from number one with no competitor to bankrupt with the IMF paying their bills. Can that happen? Well, it has happened before, not just to Britain, to many other countries. And I get the American debt, and I mean, maybe I just cannot add, but I do not see any way that my children cannot have huge problems in their lifetime because of the U.S. dollar, problems with the U.S. dollar. I remember 50 years ago, there were gigantic problems in the world with the British pound. Everybody was always trying to figure out, how do we save Britain? How do we save the pound? They eventually went bankrupt. Margaret Thatcher came along and supposedly saved Britain. She was elected in 1979. That was the same year that the North Sea oil started flowing into Britain. So you give me the largest oil field in the world, and then I'll show you a very, very good time. And that's what Margaret Thatcher. So I don't know what's going to save the U.S. We have a lot of oil, but not that much. Not comparative to what happened to Britain at that day, in those days. And I mean, Washington keeps saying, don't worry. But I keep adding and subtracting, and it makes me worried. Unfortunately, I think I know that most central governments, most central banks in the world know that if they print money, they will look good for a while. I see national debts everywhere, skyrocketing everywhere. And the only solution that they see to that is to print much more money, increase the debts. So I see a world, it's happened before, where currencies are debased, the currencies lose their value. People are trying to figure out ways to survive. And we haven't even gotten to a war yet, because often when going bad somewhere, the politicians blame the foreigners. Whoever the foreigners are, it doesn't matter. They always say, not us. We're good, solid human beings. It's those few horrible foreigners that are causing the problem. It's always happened that way, and I suspect they will again. Doesn't matter who the foreigners are. They find some foreigners. They always find some foreigners. Well, between now and then, a lot more turmoil, a lot more currency debasement, disasters in currency, debt, bankruptcies, and usually periods like that have some war. Am I suggesting any of this is good? No. I read enough. No, it's horrible. It's stupid. It's foolish. Is it going to happen? It always has.
Rogers is candid about his concerns. If and when a major currency crisis hits, the world will be forced to confront challenges unlike anything we've seen in recent history. The sheer scale of debt, combined with an entrenched culture of money printing, has set the stage for a financial reckoning that could redefine global economic systems. The foundation of today's economy rests on fiat currency, money that isn't backed by a tangible asset like gold or silver, but is instead supported by the full faith and credit of governments. Rogers argues that this setup is inherently fragile because it relies on the stability and credibility of central banks, which have increasingly turned to money printing to cover shortfalls. The problem with this approach is that it gradually erodes trust in the currency itself. As debt mounts, the currency's purchasing power declines, leading to inflation. Rogers provides a sobering historical example of what can happen when fiat currency collapses. He recalls the British pound, which lost its status as the world's reserve currency in the mid-20th century. As Britain's debts mounted and its economic power waned, the pound suffered, leading to inflation and an eventual bailout by the IMF. This wasn't an isolated incident. It's a pattern that has repeated itself throughout history. When nations take on excessive debt and devalue their currency, economic hardship follows. The question then is whether the US dollar will face a similar fate. The US dollar's role as the world's reserve currency has allowed the United States to borrow and spend freely, but this privilege has come at a price. The national debt has reached unsustainable levels, and Rogers is skeptical that the current path is viable. If the dollar were to lose its reserve currency status, the impact on the US economy would be devastating. Inflation would likely skyrocket as the demand for dollars declines, making imported goods and basic necessities more expensive. For Americans, this would mean a significant reduction in purchasing power, with potentially severe consequences for the middle class. This is where precious metals come in as a lifeline. Gold and silver have historically been seen as safe haven assets because they retain value even when fiat currencies falter. Unlike fiat currency, gold and silver are finite resources that can't be printed at will. This scarcity gives them stability, as their value isn't dependent on any one government or central bank. During times of economic crisis, people have consistently turned to precious metals as a way to preserve wealth, and Rogers sees no reason why this would change in the future. But Rogers also highlights a critical point. While gold and silver are excellent stores of value, they may not be easy to use in day-to-day transactions during a crisis. This is especially true if the crisis is severe enough to disrupt normal market activities. To navigate this, Rogers suggests that precious metals should be part of a larger strategy. Having physical gold and silver provides a safety net, but diversifying into other assets that can be more easily liquidated may also be wise. Let's turn our attention to silver, often referred to as the poor man's gold. Silver is not only a hedge against inflation, but also an industrial metal with significant demand in sectors like electronics, solar energy, and medical devices. This dual functionality makes silver unique. When the economy grows, industrial demand for silver rises. When the economy contracts, silver's role as a safe haven asset comes to the forefront. For investors looking for an accessible entry point into precious metals, silver offers an affordable and versatile option. As we look to the future, Rogers contemplates the potential for a return to the gold standard, a system where currency is directly tied to a certain amount of gold. While he acknowledges that a gold standard won't happen overnight, he believes that if the fiat system continues to falter, a return to asset-backed currency could become a serious consideration. Such a move would impose discipline on governments, forcing them to manage debt and inflation more responsibly. While a full transition to the gold standard is unlikely in the near term, Rogers sees increasing interest in gold as a sign that the market is losing faith in fiat currency. Geopolitical tensions could exacerbate these economic issues. Rogers warns that when economic problems arise, politicians often deflect blame by pointing to foreigners as the cause. This pattern has repeated throughout history, and it's not difficult to imagine a similar response today. With rising tensions between major powers, the potential for conflict becomes a real risk. Economic hardship often fuels nationalism, and as countries look for scapegoats, international relations could deteriorate, leading to trade wars or even military conflicts. The current economic landscape, marked by record-high debt, inflationary pressures, and global uncertainties, creates a perfect storm for precious metals to appreciate in value. As Rogers emphasizes, the key is to prepare before a crisis hits. Once a financial panic begins, demand for gold and silver tends to soar, making them more expensive and harder to acquire. Investors who recognize this trend early and take action will be better positioned to protect their wealth. Finally, let's address the broader implications of a shift toward a gold standard or gold-backed currency system. Such a change would represent a monumental shift in how the world manages money. In recent years, some countries, particularly those within the BRICS alliance, have discussed alternatives to the dollar as a reserve currency, with gold often being part of those discussions. By tying currency value to a physical asset like gold, countries could restore confidence in their monetary systems and curb inflation. However, a shift to such a system would require significant political and economic adjustments, and Rogers notes that it wouldn't happen quickly or easily. Even if an official gold standard doesn't return, the growing interest in precious metals suggests that many people and governments are losing faith in fiat currencies. This shift is already underway, with central banks worldwide purchasing record amounts of gold in recent years. As fiat currencies continue to struggle, the market is increasingly turning to gold as a de facto standard, if not an official one. To summarize, Jim Rogers' insights serve as a wake-up call. The world's financial system is heavily burdened by debt, and the foundations of fiat money are becoming increasingly unstable. While gold and silver aren't a cure-all, they offer a way to protect wealth in an uncertain world. For those who heed Rogers' advice, investing in precious metals could be a way to secure financial stability amid the potential volatility of the years ahead. For viewers concerned about rising debt, inflation, and geopolitical tensions, the time to prepare is now. Gold and silver offer stability, not just as investments, but as safeguards against a potentially turbulent future. By taking proactive steps today, you can be better equipped to navigate whatever challenges lie ahead. Thank you for tuning in to this analysis. Stay informed, stay prepared, and consider adding gold and silver to your financial strategy as we move into uncharted economic territory. As Rogers emphasizes, history may not repeat exactly, but it often rhymes. and those who learn from it are the ones best prepared for the future.